Aviva is one of the biggest wealth management and insurance companies in the UK. And it's no surprise that a lot of you watching this probably hold the stock because it's a huge dividend payer with an annual yield of around 7%. But is it actually a stock for the future? In this video, we're going to be analysing the business model, the growth opportunities for Aviva, and also the fundamentals of the stock to see if it's overpriced or not. I want to say a massive thank you to Danny for recommending that I look into this stock. And if you've got any stocks you want me to look into, then leave them in the comments below. Let's get into it. Aviva predominantly operates in the UK and Ireland and also in Canada. And a lot of people know Aviva for its insurance policies, but it's also got a huge presence in wealth management and retirement funds. And that is what we're going to focus on today because I see them as the huge growth areas for Aviva. Now, the reason we're focusing on this is because the UK population is increasing in size, but it's also getting older. So what you can see on this figure is you've got kind of two lumps progressing outwards at the age of 50 and 30. And that means there's a high proportion of people in the UK at that age range. So in 30 or 40 years, there's going to be a huge proportion of people who are over the age of 80. And there's not many people of a young age. So the UK population is going to get older with time. It's also been predicted that 1 in 4 people who reach the age of 65 will live to the age of 90. So this plays into Aviva's hands in terms of the growth of those pension funds and wealth management because people will have to start investing for themselves as they won't be reliant on the state pension. Now, Aviva aren't stupid. They know about the UK becoming an ageing population, and you can see it in the products which they offer. So you've got things at the start of life like the Junior ISA, but if you focus on the bottom of this diagram, you can see that they're also targeting this retirement group, so financial advice and making most of the retirement. Now, if you think about this for the elderly population, there's essentially two streams of income here. You've either got the financial advice, so just advising people on the wealth management side, or you've got the products. So that's things like your retirement accounts, your savings accounts, etc. And you can imagine if the population is increasing in size, but also is getting older, you're going to get a large proportion of people who need these products for a longer period of time. So that opens up a huge growth opportunity for Aviva if they can get these customers. But it doesn't just stop with the elderly population, because if you look at the other products based on this figure, so if you look at things like car insurance, life insurance, home insurance, and health insurance, they're going to be needed in higher proportions as the population increases in size. But also, if the population is getting older, then people are going to need things like life, home, and health insurance for longer periods of time. So this also represents a huge growth opportunity for Aviva. Now, of course, there's huge competition in this area from companies like Legal & General, Barclays, and other banks. But Aviva are performing pretty well. They're the fourth biggest company in the UK for insurance policies. They've got a huge foothold in terms of insurance policies for businesses and actually increased their customer base by 700,000 people since 2022 and actually increased it by 300,000 people in the last year. So they're doing pretty well. But Aviva don't want to just stop there because you can see that the growth opportunities across all of their key markets is aimed at around 5 to 15% per year. And that's through things like investing in UK infrastructure, promoting innovation through digitalisation of products, and also providing these pension savers and access to advice for the elderly population. Now, all of this sounds great. Aviva have already got a good business model and have got these clear growth opportunities, but the stock market is always forwards looking. So actually, is all of this already priced into the stock price, considering Aviva increased by 20% in the last year? Let's look at the business fundamentals to decide if it's worth investing in Aviva or not. Now, what you can see in this figure is the dividends in pence per share from 2006 to 2023. And instantly you can see that Aviva have paid a dividend every single year. In 2011, 2013 and 2019, there was a cut in the dividend, but all other years are increasing year on year. Now, although it does look like their net income is coming down with time, Aviva actually generated over £1 billion in net income in 2023. And the reason it's come down is because they've been acquiring other businesses. So they've acquired businesses in Canada and they've also acquired AIG UK. When you look at their assets to the liabilities, The assets outstrip the liabilities, showing they're not riddled by debt. And actually, they also hold 17 billion in cash. So they're in a pretty healthy position. Now, I have my own spreadsheet where I track all of the fundamentals behind stock prices. And I know it looks quite complicated, but essentially, this pulls in things like the earnings growth, the dividend yield, the PE ratio, etc., etc. And what you can see for Aviva is that most of the cells are green, which is obviously good news. But two of the cells are red, the price to book ratio and the PEGI ratio. And if you want me to do a video on these ratios, then just let me know and I'll happily do it. But essentially, the PEGI ratio looks at things like the PE ratio, the dividend yield, and the earnings growth in terms of net income. And if the PEGI ratio is less than 1, then it suggests the stock is undervalued. And it's currently over 1, but importantly, it doesn't pull in future growth potential, which is where I think Aviva excels here. So actually, I think the stock should be around the £5 mark, and it's currently around £4.75. So I just want to say a massive thank you once again to Danny for recommending this stock to look at. If you've got any stocks that you want me to look at all, just leave them in the comments below. And if you've enjoyed this video, then please remember to hit the like and subscribe, because I can't monetize the channel until I hit 1,000 subscribers. Thank you very much.